So we are still on professional ethics and code of conduct. So we are being through with it today and go to the other topics today. So let's go to this is where we stop. We are looking at areas where independence may be under threat. That's what we are looking at. So we have treated some parts. We've treated financial interests. We've treated provision of non-audit work. I think that's where we'll stop. So we are looking at the last two, which is gift and hospitality, actual and threatening litigation. So let's go to that. Now let's go to hospitality and gifts. Now hospitality and gifts can cause threat to independence. It can cause a threat to independence. How can this cause threat to independence? What kind of threat? That should be the question. What kind of threat can gift or hospitality cause? It can cause self-interest threat. It can cause familiarity threat, and it can cause intimidation threat. Look at this now. An auditor is coming to a particular company to audit their financial statement. Now that auditor is now giving 5 million. The management of that company now gave the auditor 5 million as a gift. What would happen? It will serve as a threat to what? To that auditor. Because why? He has received a gift that is what? Material. So it will cause a financial what? Interest. Now the reason why those people are giving the gift is that maybe they have become what? Familiar with the what? With the auditor. Maybe an auditor that has spent like 20 years, the company is now doing their anniversary. They now invited him to come and celebrate the anniversary with them in UK, and they are in Nigeria. They will pay the flight money and everything. What is that? That is familiarity. Because those that you are not familiar with or that you are not used to, there are some certain things that you not offer them because you may be scared of their reaction. But when you become familiar with people, man, the way we had, I can't come and pick the cap on her head now because we have not become too familiar. But when we begin to talk, as my friend, I can just slap the cap out of on her head because of familiarity. The same thing is applicable to auditor. The way you will be hospitable to someone you are not familiar with, you will be cautious. There will be limit to what you want to do because you don't want the person to feel as if there's something in your cupboard that you are trying to what? To protect. Are you okay? But when you become too familiar with someone, what will happen? Even though you are giving the gift and everything, the person will not think that maybe there is something you want to hide from him. So it can also cause intimidation threat. Look at this one. I've been giving you gifts. You now write an opinion that I don't like, or you gave a conclusion about the financial statement that affects me as the director of finance. And I've been giving you 5 million, 2 million. Sir, would I tell that I will take my gift, that if you don't change that opinion, that all the gifts I've been giving you, all the money I've been giving you, I want to collect it back. Some people can even report to the authority that they are collecting money from them. So gifts and hospitality, especially, it is not all gifts that can cause threat to independence. The gifts that can cause threat to independence, it is when that gift is what? Material. When it's material. When the gift is not material, especially to the two recipients, that gift can be what? You buy me a lunch. Okay, we came to audit your company, and during the course of the lunch, you bought us food. That may not cause threat to independence because that food you bought is what? Is immaterial. Are we together? Now let's now go forward. Now what will now be the safeguard? What will be the safeguard to gift and hospitality? What will be the safeguard? That an auditor should not accept any gift that is what? Material. If any of the member of the audit team has accepted any gift, he should disclose the gift that he has accepted, and that person should be removed or replaced. From the audit team. So let's go to actual and threatening litigation. This is when your client is taking you to what? To court, or threatening to take you to court. Yoruba used to say something that two persons cannot take themselves to court and come back and remain a friend. So if your client should file a litigation against you, you should resign from that arrangement. That's the safeguard. Are we together? That is the safeguard. Or is threatening to what? To file a litigation against you. What will that create? It will create an intimidation threat. Also self-interest threat. You know why? The reason why you are not letting him go of that work and is saying that he will file a case or he will take you to court is because you are benefiting something from that engagement. Now let's move forward. So look at it now. If a client file a litigation against a member or one of the members of the audit team, what will be the safeguard? That person should be removed from the audit team. But if it is against the company or the audit firm, the audit firm should resign from that engagement. Are we together? Now let's now go to this question now. In page 50. Page 50. Let's look at it. Page 50. Page 50. They say your firm. This is a discussion question. I will read. You guys will answer and I will make a conclusion on it. So your firm is the auditor of Happy Day, an entity which provide hospitality package at a raised cost around a single country. The managing director of Happy Day has suggested that the following to the managing director. All the members, look at it now. All the members of the audit team are to be offered a 2 free ticket to a major event at the raised cost of their choice. Who is making the suggestion? The managing director of Happy Day. Is making this to the managing partner. B. Last year audit senior should be seconded to the organization for a 6-month period. The current year audit is not yet underway. C. That the audits also provide internal audit services required. Discuss which, if any, of the above proposal will be acceptable to your company if not stated, why not? State out the main safeguard, if any, which should be required. You get what I'm saying? Page 50. Now, I'm asking you, who can answer this question? Wait. Pause. So let's go to confidentiality and conflict of interest. You know, confidentiality is part of the confidentiality and conflict of interest. You know, confidentiality is part of the fundamental principle. And what do we say about confidentiality as part of the code of conduct of fundamental principle? That a professional accountant a professional accountant must respect the confidentiality of information. Meaning that they should not disclose any information that they come across during their what? Their professional duty or exercise, right? That now, that is the general basis, right? That information that are obtained during your professional work, you should not what? Disclose it. That's the basic what? Principle. But in this basic principle, there is an exemption to it. And we have three what? Exemption. What I say? Three exemption. What are the exemption? Now, when it is required by law and the consent of the client is required also. That is, if it's required by law, that does not mean that you will not be giving the information out anyhow. You also need to seek the approval of the client before disclosing what? That information about them. Are we together now? When it is permitted by law, it should be permitted by law. When it is permitted by law and the consent of the client is also required, are we together now? That is when the company, the law permits you to disclose that information, and the approval of the client is also needed, so you can disclose. When it is required by law, meaning that the law requires you to what? To disclose that information. Now let me give an example of when the law can mandate you to what? To disclose the information. Who can tell me? Maybe if the client, you discover that the client is involved in money laundering or trafficking or human trafficking or financing terrorism, you are meant to what? To disclose those information because it is what? Required by law. Are we together? It is required by law. Look at this also. Look at this. Look at this. Look at it. When a court summons you to come and during a court proceeding to come and give explanation, you are also required by law to also disclose those information or those dealings that have come across during your professional what? Exercise. Let's now look at three. What's three? When you have a professional what? Duty or right to what? To disclose. Let's say you are being summoned to a disciplinary committee now. Are we together? You can't say because I'm holding there's confidentiality. I can't. No, you have a professional duty to disclose that information based on what? Based on the recommendation of based on the authority of that committee. Are we together? Now let's go. So let's now go to conflict of interest. Conflict of interest. Now, conflict of interest can be between members and clients. Between what? Conflict of interest can appear in two ways. Between member of the audit teams and the client. Now, how can the conflict of interest arise between a client, between the member of the audit team, or between the firm, the audit firm, and its client? When they don't have the same what? Interest, they are acting separately. Are we together? Now, what can cause this now? What can cause that conflict? Especially when the members of the audit firm is competing directly with the client. Yes, look at it now. I have a business. I'm the engagement. Look at it now. I'm the managing partner of the audit team of Dangote. Are we together now? And I also have factory, cement factory. What is Dangote doing? Dangote cement, what is it doing? They are producing what? Cement. And I mean, as an engagement partner, also have what? A cement factory. What is that? That's conflict of interest. when a member is competing what, or we are bidding for a contract. My client is bidding for a contract, I myself is also bidding for the same contract. That is conflict of interest. It may arise. Now, another way conflict of interest can appear between members or the audit firm and the client is, look at it now. When I am receiving a commission and when I receive commission from a third party that I introduce to a client, it will cause conflict of interest. Look at it. This is the member of the audit team or the audit firm. This is the client. We now have, look at it now, we now have a third party which specialize in automation system. Now, look at it now. When the audit team audited the client, they now discover that the client's operation is based on paperwork, that the system need to be automated. They now recommend these automated companies to the client. Are we together now? Now, this automated company already has a contract with the audit firm or with member of the audit team, that any client that they introduce and they got that job, that a certain percentage of that money will be given to them. Are we together? What happened? That means this one is acting in the interest of what? Of the third party and the client, because he will be receiving something from the automated company. Look at it now. Now, you know why conflict of interest may arise now? Even though there are some companies where they will be go and audit, that automated system may not be required, but because of what they will get from the third party, they will be making the recommendation. Can you see? So place, because they know the benefit they will get from it. Thank you very much for that, man. Are we together? That can raise conflict of interest. Now, when there's conflict of interest now, what is the safeguard that we should apply to this now? What is the safeguard? Now, that commission that you are receiving from that third party, make it know that the client I introduced to you, the third party that I introduced to you to come and help you to carry out the automation system, will be giving me a certain amount from the money you pay in for that services. Wow. They will tell the client, they will inform the client. You don't get what I'm saying? This one now is going to pay this third party now, because the audit firm or member of the audit firm has actually recommended to the client now. Recommended, they will now go to the client. Maybe the work is now given to them. Let's say they have agreed that any 5% of any on the contract cost will be given to the audit firm, because they are the one that they have to take part to enjoy from it too. So the audit firm now will now tell this client, this one will not tell, the third party will not tell that we have an agreement with the person that recommended they will be collecting that. No, the person will not do that. The third party will not do that. So the audit firm will now tell the client that this is what we want to give to this person that we recommend, that any recommendation that we make for this automation, for this third party company, that we get a certain percentage from it. So that means this client, once they are aware of it, they can decide whether to go ahead with the engagement, with the services of that third party or not. So it means that it is not your decision. They are aware of it. Are we together? Are we together? Are we together? Are we together? Let's now go to the two. Conflict of interest between competitive clients. Between what? When you are acting for two clients that are competing against each other, it will cause what? Conflict of interest. Two, between competitive clients. Look at it now. You are acting for both what? Pepsi and Coca-Cola. Coke. You are acting for both Coke and Pepsi. Are they not two competing industries? You are acting for both Nike and Adidas. Are they not two? Are we together? Now it can cause conflict of what? Of interest, because we decide to what? To provide the information of one to what? To the other. Are we together? Now you should not disclose confidential information about Pepsi to Coca-Cola. Are we together now? Especially when they are competing against each other. Are we together? Are we together? Yes, sir. Now let's look at this major safeguard to be applied. We can this major safeguard that should be applied. Are we together? Before, let's say we are working for, let me use Adidas now. Let me use which company should we use? Let's use okay, let me present now. Like Ezican and cost accounting center. Now let's assume that I'm now working for both. Are they not going to be conflict of interest? What? That means the place that are paying me more. When students want to now ask that I want to do ICANN, where should I go? Costume. What will I say? Anywhere benefits. Are we together now? That has caused what? Conflict of interest. Now they are asking that if you are acting for both now, just give me an example now. If you are acting for both now, as an auditor, there is a safeguard that you can apply to reduce the threat or that conflict of interest now. Now, let's say it was Ezican that I was teaching before as an auditor. I just want to give you an example. Now, that means Koski is now approaching me. Before I take up that job, I must look at the ethical issues or threat that may be I may be exposed to. Are we together? I must take consideration to know whether to accept or not to accept that new engagement that will cause conflict of interest. Are we together? Are we together? Yes. So if you know you can't handle that ethical issues, it's better you decline it. Look at it. They said, giving careful consideration to whether it is appropriate to accept an assurance engagement from a new client that is direct competition with an existing client, it may be possible to decline the offer from the potential new client. They are not saying that once a new competitive client should come, that you should always what? Discard them. No. If you know that it will not be ethical, that there will be conflict of interest, and it will affect your independence, are we together? What you should do is you should decline. But however, if you don't decline, you have to take careful management in managing the what? The client. So how do you now manage the client now? That means the staff, the audit team that is going to audit Ethican should not be the same should not be the same audit team that will audit what? Audit Koski. Are we together? Are we together? Are we together? Maintain a Chinese wall between the two audit teams. What do you mean by Chinese wall? There is no communication between the two audit teams, where information about the other clients can be exchanged with the other engagement team. That's what we mean by Chinese wall. Have you seen Chinese wall? That means when you stand near Chinese wall, you can't see someone that is in the other side. That's what they mean. Are we together now? Preventing access of information between the two clients.
Clients of the audit team.
Yes, na client audit team and the client too. If the audit team are working together, we dey not have access to the information of the client. Are we together now? Yeah, that's what I was saying. Are we together? And also it is important, can what?
Prevent freedom of information.
Not compliance with rule and regulation. Non-compliance with rules and regulations. Now, what do you mean by non-compliance with? That is when the company does not comply with the provision of the laws or regulation. Now, the federal law says that every company after 6 months after the financial year end, that you are meant to file in your returns within 6 months, and you didn't file in your returns. That is what? Non-compliance. Are we together? Or the law says that you should prepare your financial statement on a quarterly basis. You didn't prepare it. That's not compliant. Maybe there are some environmental laws that you should comply with. That is what? Non-compliant. Maybe there is some financial reporting regulation that you didn't comply with. That is what? Non-compliant. Any law that a client does not comply with, it is what we call non-compliant. Are we together? And that's why you see the shorten it to be in non-clear. What do you write? Non-compliance with rules and regulation. Non-compliance with rules and regulation. And yes, not clear. Now, what do we mean? Are we together? Now, when we look at non-compliance, it means that a company that is involved in corruption or financial or fraud or bribing, that's what? Non-compliance with what? Rules and regulation. Into money laundering, non-compliance with rules and regulation. Insider deals, that's non-compliance with rules and regulation. Are we together? Now, if an auditor should now come across non-compliance with rules and regulation, how should the auditor handle non-compliance with rules and regulation? That is the responsibility of an auditor in relation to what? To NOCLA. which is non-compliance with rules and regulation. Are we together? Because they can give a scenario that they discover that the client, the auditor discover that the client does not comply with the environmental or sustainability reporting or environmental issues. Are we together? Or laws in a land. That as an auditor, what is the procedure that you are going to what? Follow? Are we together?
Yes.
Now, let's look at the auditor's responsibility before we're now looking at the what's it called? Let's look at the auditor's responsibility in this now. Look at it now. When an auditor becomes unaware of non-compliance with rules and regulation, the auditor has a responsibility that they must perform, and this responsibility is that they must obtain an understanding of that matter. Are we together? Auditor is saying that a client, they have come across that the client does not comply with rules and regulation. They should understand, study that law, and have an understanding of what that law is saying, and how the client has violated that law. Are we together? So after they have done that, that is when you can now advise the management, because you have obtained the understanding of the matter of non-compliance with laws and regulation. You can now advise the management on how appropriate, how they can handle that issue of non-compliance. Are we together? And also help them, are we together? And prescribe to them how they can mitigate. Are we together? How you can mitigate or remove the consequences of non-compliance. You know, what's the consequences of non-compliance with rules and regulation? Fines, penalty, imprisonment for those in the company that is even responsible for that. Are we together? Are we together? Now, if the management, you know, there are management that is ensured that they should follow they are the one that will carry out the responsibility of now obeying what the rules and regulations are saying, right? Now, if they do not comply after the auditor has informed them, what will the auditor now do? He has a duty to inform the appropriate authority about the issue of non-compliance. Do you get it now? They have disclosed it to the management. They have obtained understanding that this is what this thing is saying, this law and regulation, and you have not complied with it. And they have advised the management on the appropriate action they should take. And if the management now do not take the appropriate do not take the appropriate action, that means there will be consequences for that. They will also inform them of the consequences. Now, if the management do not now comply with the rules and regulations after the auditor has actually prescribed this, what will the auditor do? He will now report to what? To the appropriate authority. Are we together now? Are we together? Now, are we together? Now, let's move now. Let's move. So, any question? Any question? No question. So let's go to chapter 3. Obtaining an engagement.